his CPA told him, well, you just got to keep it in the family and hand it over to your kids so they'll get the step up in basis. He didn't want to. He wanted to exit. And the tax bill, well, the CPA goes, well, then you're going to have to write a check for $430,000. So even if you're going to sell the business in 2 or 3 years, start having these conversations now. If you're a business owner, you're paying hundreds of thousands of dollars or millions of dollars in income taxes, you do not have the right CPA.
Hey there, entrepreneurs. Welcome back to the Scale to Sell podcast, the business owners podcast designed to help you build transferable value, create more freedom, and exit on your terms. This is episode number 69, what your CPA isn't telling you about your exit. A conversation that we've been having a lot lately with a lot of people related to the tax planning situation. Big difference between tax preparing, getting ready for all the deadlines of reporting what's happened, and actually preparing and planning for future taxes and looking proactively at the opportunities to reduce those tax bills that absolutely no one likes. One of the common scenarios, Steve, that we have in talking with business owners is we'll be talking to them about the growth and the exit of their business. And inevitably, the tax planning conversation comes up because as business owners, as successful people, there's some big tax bills, lots of checks with lots of commas in them. And inevitably, we ask about what their current tax situation looks like, what their CPA does for them, and what that looks like from that perspective. And inevitably, when it comes to the tax planning conversation, the answer is always like, well, my CPA takes care of that. And that's kind of normally the end of, in their minds, what that conversation should be. CPA, hasn't gotten in trouble with the IRS. Things are filed on time. Deadlines are good to go. But that's not really the same thing, is it?
Well, first off, when most business owners that say they're going to sell my business for $1 million, $5 million, $10 million, $100 million, very few of them think about taxes. And like you said, they just assume they're going to have to write a check. They don't think about it, but then they're going to have to write a check. And their CPA typically doesn't bring it up because all they're going to do is file a tax return. One business owner was going to sell a piece of property and have a capital gain. And his CPA told him, well, you just got to keep it in the family and hand it over to your kids so they'll get the step up in basis. He didn't want to. He wanted to exit. And the tax bill, well, the CPA goes, well, then you're going to have to write a check for $430,000, right? Wrong answer. That's with a CPA that doesn't do tax planning. So whether it's a tax bill of hundreds of thousands or millions or tens of millions, these tax planners and advanced tax people just are out there and been doing this for decades about how to mitigate taxes. So I would ask, before we even get into your script, if you're going to sell the business for whatever and you haven't considered what the impact of the capital gains at closing, and you don't you don't wait until after you sell it, you do this before you sell it, like as far in advance as you can. So even if you're going to sell the business in 2 or 3 years, start having these conversations now.
It oftentimes, business owners assume that because the IRS isn't knocking at the door, they're not having tax problems in that way, that everything's going right. That's the kind of framework that they're operating from. But we're going to talk about the key difference there. And like you said, timing is everything. The more time that you've got to be able to plan and prepare for these things in advance of those big liquidity events, the exits, the selling of real estate, those types of things, the better it is. But for most CPAs, they're more of the historian. They're the ones that are reporting what has actually already taken place and making sure that you are compliant in that regards, making sure that you're filling out the forms properly and getting in by the deadlines and making sure that everything is good to go on that side. Very backward looking, not very proactive looking. And I know there's a question that you like to ask business owners, successful families.
When was the last time your CPA, accountant, enrolled agent brought you anything that saved you a dramatic amount of money? And your CPA, in your case, running your business for years, they, like Adam said, can do a great job of filing out tax returns and getting that in. But if you could have a grand exit Who on your team has done this before? Ask them. Have you ever had somebody that sold a business? And okay, how much for? What was the tax bill? And what did you do to reduce that or erase that? Ask them. Because yes, it's like kind of going to the doctor. You have your, general family doctor you go to get your physicals, whatever. But if you have to have surgery, major surgery, okay, we've got a neurosurgeon that lives beside us. I doubt he does, stuff, running noses and stuff like that. He's a specialist. That's what you need. You need a tax specialist in this type of event.
Well, and there's a difference too in the idea of being proactive, right? We're not just talking about how you fill out a form or when you're submitting the documents. You're talking about proactive strategies that are going to save you a significant amount of money on those taxes. And if that hasn't happened, an important question in your mind is why? Why hasn't that happened before? And why is this just coming up now when Steve and Adam are having this conversation and bringing some of these things to your attention? It's like we were having this conversation around heating and air systems the other day, right? We had an issue with ours at our house. And there's the difference between someone who just, if something comes up and you have the emergency situation of coming in and fix it versus someone who is taking a look at, okay, things are looking good now. We've come in for the checkup. This is looking good. This is going to need to be replaced soon because of these things, like the maintenance of it and just getting a good sense of what is going on and thinking ahead, not just reacting to what has already happened in the past.
Here's a quick example. We have a business owner that we've been working with about 8 or 9 months, and it's a successful business. Without the sale of the business, he will not be able to exit and retire. And that's true of 80 to 90% of you guys, by the way.
Vast majority.
And anyway, and so in his business, we're listing it for our M&A team is listing it for $13.1 million. The capital gain, we figured, is $3.4 million. Well, his CPA would tell him to write a check for $3.4 million. Our tax team got it down to around $100,000.
Yeah, big difference.
It's not just a filing out a tax return. He's got to do some stuff in how he receives the money. We've been working on that since he walked in the door, even before the business actually went to market. You think his life is going to be better with that additional $3 million plus in his pocket, in his lifestyle, to not only let him go on to the next phase of his life and make sure that not only him and his family are taken care of, but his churches, his charity, and everything else. So legal tax mitigation strategies. Not everybody needs these, but especially you business owners that are looking to exit your business, you need to make sure you talk to somebody that's qualified.
Well, and the proactive nature of what we're talking about matters so much when it comes to the exit, because you've got the tax strategy, you've got exit strategy, and then all of the details about the business. And look, we aren't the tax planners on the team. We have the actual tax planners on the team. We're certified tax and business advisors, which we describe as being the ambulance. Like, we're the people that get you to the right people so that you know who to talk to. It can help solve the specific situations. But even things like the entity structure and the difference between that and how you are taxed, those differences, which oftentimes people, they formed their company back in the day, haven't thought about it since, but those decisions maybe from 15, 20, 30 plus years ago could have a very negative impact on the tax strategies that are available to you now. But again, giving you time before that exit to be able to make adjustments with the tax lawyers, tax planners on the team. Things like compensation and distribution timing. Is it an asset sale versus a stock sale? All of those things are options that are available to you, strategies that are available when you give it time to be able to plan appropriately and know what the situation is, what your goals are, and how can we strategically save you a significant amount of taxes legally, morally, ethically, all of those things, and do it the right way. Giving yourself enough time to be able to do that gives you way more options than if you wait until the sale or after the sale, and then you're all kinds of
most people
trouble.
In most states, to be a business broker, a lot of states don't even require you to have a license. In most states, you could be a business owner, a business broker today. But my point is that many of those people is like selling a house. They want to sell you the house and get paid a commission.
Yeah.
Some more advanced have a team and have an M&A professional. And some of those, some, not all, some of those have a tax planning team around them, but not all. And so we try to just make it a holistic. I'm a financial advisor. We have a financial advising team. We try to make sure that your money, you're going to harvest enough money out of the business, mitigate anything that will derail that exit, and we want to make it successful. And so you got to make sure, again, if you're going to work with it, maybe you can sell the business yourself and you get top dollar. I don't need a broker. I don't need an M&A guy. I'm going to sell it myself. Okay, what's the tax bill? All right. So if you're using the same tax team as you've been using, there goes that check for $250,000, $500,000, $10 million, whatever it might be, to the Uncle Sam.
Well, and this is the part that, in bringing up the difference between the historian CPA and our proactive approach here of what this actually looks like, of having what we call the family office, of having the tax advisor, the attorney, the M&A advisor, the exit planner, financial advisor, all there together, having the conversations, not just around the end of the year, what just happened, in the previous cycle that you're now reporting on here, but thinking towards the future, understanding what the goals are and what we're creating. So it's not, we talk about the siloed information, how oftentimes experts are they're in their own lane and they know what that is, but they don't necessarily understand how all the pieces are trying to fit together.
Right.
That's really how this approach of being the one-stop shop has really been. And the success of it is just incredible when you have teams that are capable, that are forward-looking, and that communicate around those goals. It's powerful for the business owners.
Here's another red flag for you. If you're a business owner, you're paying hundreds of thousands of dollars or millions of dollars in income taxes, you do not have the right CPA.
Yeah.
You need a CPA that is qualified and trained and has a track record of tax planning. We like tax attorneys and tax planners, and not all of them are created equal as well. And so, but a red flag for you, if you're paying hundreds of thousands of dollars in taxes, I promise you, I can almost bet on it. I wouldn't bet, but if I did, I would say that you go to sell, you could be writing big checks to the IRS.
Absolutely. And again, what we're not saying here is that your CPA is intentionally harming you, like is trying to mess up you or your deal, but they've been trained around the idea of following the rules in a way that they're following, step by step, and making sure that those procedures are followed from a compliance standpoint, rather than seeing what are the opportunities within the law, within the IRS code, and the other related things that Congress has passed regarding tax credits, depreciation, all the sorts of things like that, that could actually benefit you in that way. And so again, proximity to the team, having a team of people that's close enough to the situation that they understand what's going on for you, the business owner, and what the goals are, and proactivity of looking forward to what it is you're trying to accomplish, what the impact of taxes are on your life now and in the future. That's really where that comes into play and where that matters most.
And most people, if you've had the same, we're not telling you to fire your CPA. It may be a one-off that you just use them for this event only, and then you go back to using other people. And we're using our old accounting firm for basic things, but they are not capable. They're not trained in the advanced strategies that me and my wife and then our businesses are using today. So, and also, many people, you may drop your CPA or add this other specialist onto it, but many of you that have a financial advisor, if your financial advisor is not geared in these types of conversations either. Many of you, what was the stat?
If the numbers are any indication, 70% of the financial advisors out there that are currently advising business owners have not had the kind of conversations around value, growing the value of your business, and how do you protect and harvest that value after the fact. 70% are changing financial advisors because their advisor wasn't proactive in having those types of conversations, bringing in the types of people that we're bringing in to the situation. And they're looking for that kind of specialist that you were talking about, who's thinking about what it looks like to grow the value of the company, what it looks like to be able to protect that and to be able to keep more of that after the sale.
So wake up call to you financial advisors that may be listening right here. You might want to get some of this training that our team offers.
Well, and going back to the story that you were telling about your experience with your wife, mom, I remember the tax professional that you're still using for some of those basic
Basics,
things just
yeah.
to help with some of the accounting on the back end of things. She used the phrase, wow, I guess you outgrew me, our team.
And it's funny because the team actually uses that.
Yeah,
Hey,
we actually talk about that.
You've outgrown your CPA. And when my wife went over to meet with this accounting firm at the beginning of the year, she gave them a check to pay them for the full year. We're still going to have you do some basic things. And Annette was telling them about these advanced strategies and what the team we're working with. And she said, what our team says,
I guess you've outgrown me.
I guess you've outgrown me. So anyway, she was right on.
And that was the case. We needed more than just what we had been getting. And that was
Let's just tired of writing seven-figure tax checks all the time. So legally reducing, erasing my tax burden down.
Yeah. Again, your CPA can be excellent at doing their job of the compliance, but that doesn't mean they're doing the full job of what you're needing. And so again, it's not an insult. It's not an indication of you and the choices that you've made in the past. It's just different roles for different parts of this equation. And so needing someone who can do both the compliance side of things and making sure that you're following the rules, but at the same time be able to bring you the proactive tax planning strategies that are going to significantly save you is really what's needed here. No one connected that tax picture for you in your specific situation yet. And that's what you're needing. That's the part of the puzzle piece that was missing.
It's not just selling the business. If you're a business owner, many of us own other real estate.
Yep.
If you're going to exit that real estate, maybe not even your business, exit that real estate, and you're going to hundreds of thousands or millions of dollars in capital gains, our team can help you out in that, or you need a team, even if it's not our team.
Absolutely. If you have any questions and you're like, oh, this is me, like you're raising your hand at this point, like, please, we need to have a conversation about this. Totally understand, right? Having a different perspective on what it means to be able to save significantly on taxes is a big deal. Go to scaletosell.com/value. Not only getting a clear understanding of what the value of the business is going to help give the tax team, of course, a better indication of what's going on here and what you're looking at for your exit. But it'll also help us be able to connect with you and make sure we get you to the right members of the tax planning team and figure out the strategies that are going to be right for your particular situation. And of course, if you haven't already, please subscribe to the podcast. Feel free to share it with your other business owner friends. We'd love to be able to grow this business owner community and hear from more of you about what's going on in your individual businesses, what it's going to take to help grow that value, create more freedom, and exit on your terms. And any last words, Steve, before we wrap up the episode?
Be proactive. Learn now. Even if the sale is years away, if it's years away, you might be getting whacked in income taxes right now.
Yeah.
May need to help the team. But I would just say it's planning, it's thinking ahead, because there's so many of you that if you don't recapture those taxes, it's going to reduce your lifestyle greatly and your ability to fulfill those dreams moving forward.
Absolutely. Until next time, keep scaling.